You'll regret buying a vacation home if you don't follow these 5 important steps. Hey guys, today we'll be talking about important things we need to consider when buying a vacation home. What are your goals? Financing a vacation home. Can you afford a vacation home? Insurance costs, and consider who will be using your property. All right, guys, first thing we're going to talk about is what are your goals when buying a vacation home? So, things to consider on this topic. What are the main reasons that you'd be purchasing a vacation home? So, are you strictly going to be using it for personal use with your family? Or are you going to be using it strictly as a short-term rental? Are you going to be kind of doing a hybrid? So when you're not using your property, you'll be renting it on the short term. So if you're going to be only using it for personal use, then you don't really have to consider when you're using it. If you are using it for as a hybrid or strictly short-term rental, that's a different story. But if you are doing the hybrid part where you will be using it when it's not rented, or you'll be using it a certain amount of time, but then you'll be renting it when you're not there, that's great. But please consider that you don't want to take away all the peak season days when you're going there, because then you'll be left with renting it in the off season or the non-busy time, and that might affect your income quite a bit on the short-term rental side. The second thing we're going to talk about is, can you afford a vacation home? So I guess it's a pretty obvious question, should probably be your first question that you ask yourself is, can I afford a vacation home? There are obviously additional costs to having a vacation home, including just the overall, mortgage costs and property taxes. So your property taxes are actually going to be higher in terms of a non-owner occupied property compared to your primary residence. That, of course, also depends on where your vacation home is. If you're, for example, if you are living in town, but your vacation home is very rural, outside of town, where it's a lower property tax rate, then it might be similar. However, it's still something to consider. The other part about affording a vacation home is the maintenance costs. You're probably not going to be doing all the maintenance yourself, especially if it's an hour or two drive to get there. So you might have to have either a handyman or a maintenance person close by to go and do the repairs or maintenance on your property. So you have to consider that additional cost as well. The third thing we're going to talk about is financing your vacation home. So financing a vacation home, depending on what you're going to be doing with it, will vary between banks and brokers. So when you're going to finance a vacation home that you're going to strictly use for yourself, it will depend on which bank you're dealing with, but most likely you're going to be needing a bigger down payment than if you were to buy your primary residence. So if you are using it only for yourself as a vacation home, usually the bank will look at your income and your debt ratio. And very similar to purchasing your primary residence, the biggest difference is going to be most likely having a bigger down payment. The financing part, if you're purchasing a vacation home for short-term rental, the down payment will definitely be higher, might even be higher than if you would be purchasing it as a vacation home strictly for yourself. So you could be looking at anywhere from 20% to 35%, depending on the situation, the location, if the bank has the appetite to finance that type of property. The second thing they're going to look at is they're not really going to look at your finances necessarily. They're more so going to be looking at the income potential or the income approach. And there are a lot of hoops to jump through when it comes down to that type of financing, because they consider it more so as a business than a property. So they would not be necessarily looking at solely your income and your financial status, but more so the income approach on the actual property and what it can generate. The next thing we're going to talk about is insurance costs. So insurance costs can be very tricky when it comes to a vacation home. It can vary in price quite a bit especially if you're close to either water or a flood zone or even beaches. That can affect your cost of insurance. The cost of insurance will also be affected since you are potentially renting it on a short term, and the insurance companies, they will have to adjust the insurance premium accordingly. I'll give you an example. So if you compare a single family home, your insurance costs will be approximately $100 to $175 a month, depending on what the property is and what the status is with your insurance company. Compared to a short-term rental, could be at least double that amount per month. So you really need to consider that when it comes down to expenses, because that can make it or break it in terms of your cash flow. The other thing to consider with insurance when it comes to vacation homes, if you're close to water or a flood zone, the insurance is going to be a lot higher. And the other thing to consider with that is that they might not even insure ocean caused floods or ocean caused damage for your property. So that's definitely something you need to look into. So the last thing we're going to talk about is consider who will be using the property. So this is similar to the first topic that we talked about in terms of your goals. However, you need to consider how much time you're going to be spending there. Are you going to be spending the summer months? Are you going to be moving there for months at a time? Or are you going to be spending, maybe a few weekends a year? That makes a huge difference when you're investing hundreds of thousands of dollars into a vacation home, and you can quickly realize how much it costs to spend 3 or 4 weekends out of the year at that property, but the property costs you $30,000 or $40,000 to run in that year. The other aspect of that is if you're covering some of your costs by renting it while you're not there, then that helps a lot. So really look at your cost per stay for yourself, where it might not be worth purchasing a property if you're only going there a few times a year and you're not renting it while you're not there because you don't like that aspect of it. So make sure that you're looking into those numbers when it comes down to it, and that will give you a little bit more clarity into if it's worth purchasing a vacation property or not. In summary, there's a lot of things to consider when you're purchasing a vacation home. So make sure that you have your trusted professionals by your side that will guide you through the process and make sure that you're making the right decision in purchasing a vacation home. Thank you so much for watching. I hope these tips help you through the process. If you enjoyed this content, please make sure to like this video and subscribe to our channel for more key information to make your real estate journey more flawless and enjoyable. Till next time.